happening here, why you see that the asset has gone up, is as a result of the deposit that has been taken from the member of the public. Now, look at here, equity, which is the shareholders fund. The shareholders fund in H1 2024 is 305 billion. Now, 3.75 billion. Key highlight of Sterling financial statements. I want to carry out the fundamental analysis of Sterling Bank in order to know if and to participate in the ongoing public offer or not. Now, I want to look at the H1 2024 and H1 2025 results. The H1 year simply means the first 6 months in 2024 and the first 6 months in 2025, just like we have Q1 and Q2. Now, the gross earning in H1 2025, 152.20 billion, compared to 212.61 billion in H1 2025. You can see that it has surged by 39.7%. The gross earning simply means the revenue of the bank, and it's subdivided into two, which is interest income and non-interest income. In case of interest income in H1 2025, we have 167.16 billion. The non-interest income is 45.45 billion, giving us 212.61 billion that we have. The interest income is generated as a result of the loans and advances that have been given to customers, while the non-interest income is generated as a result of the commission and the charges that the bank has taken from the customers. Now, profit before tax in 2024, 17.35%, year 41.55% in H1 2025, which has soared by 139%. What about the profit after tax? Let's take a look at profit after tax. Here we have 16.26 billion in H1 2024. Here we have 41.75 billion in H1 2025, surged by 157%. Now, look at it. The profit that has been generated in the first 6 months of 2025 is twice of the one that has been generated, even more than twice of what has been generated in H1 2024. This is what I tag a growth trajectory on the part of the Sterling Bank. Now, look at the EPS, earnings per share, which is the dividend of the shareholders. In H1 2025, it was 0.56 kobo. Now, H1 2025, 4.89 kobo. It has equally surged by 58.93%, which means the shareholders have been able to get more dividend in 2024 compared to 2025. Now, look at the total assets. In 2024, 3.54 trillion. In 2025, 4.08 trillion. Increased by 15.3%. The asset has grew by 15.3%. It's also a good sign. Look at liability, 3.23 trillion in H1 2024. The liability increased 3.74 trillion. Look at it, it has surged by 15.8 trillion. I know this is a cause for concern for an investor, but what you should know is this: the liability that you are seeing here, when you check the note to account, the checks of this liability come from the deposit that the bank has collected from the customer, which is another major operation or the function of the bank, acceptance of deposit from the public. So, majority of this liability that you are seeing here, why the liability has surged in 2025, is as a result of the deposit that has been taken from customer. So it's not that the company is actually indebted to anybody. What is actually happening here, why you see that the asset has gone up, is as a result of the deposit that has been taken from the member of the public. Now, look at here, equity, which is the shareholders fund. The shareholders fund in H1 2024 is 305 billion. Now, 3.75 billion, which means the shareholders fund has equally increased by what? 22.9%, which is also a good sign. Now, non-performing loan, 5.4. It has reduced to 5.1. What is non-performing loan here? Now, when you talk about non-performing loan, it's just a situation whereby the loan that has been given, those people that have taken loan, they could not meet up the repayments within the next 90 days, the non-performing loan. In case of Sterling Bank, let's look at the non-performing loan. It has equally reduced here, but let's look at the figure. When you check it, the total loan portfolio is 118 trillion. That was the total loan given within the next 6 months. Now, what now happen? If you want to calculate people that have not paid based on the note to account is 132 billion. So if I want to do it now, I'm going to have the non-performing loan, which is 132 over the total loan in the portfolio, which is 118 trillion multiplied by 100 over 1. This is how we have 11.2%, which means in 2025 the non-performing loan has reduced. And when this non-performing loan, what non-performing loan does is to show us the asset quality. It tends to measure the quality of the asset of a company. So if the ratio decreased, it means the asset quality has improved. Meaning that the reason why you see that the assets here grow is because the non-performing loan has reduced. So a reduction in non-performing loan has a direct impact on the asset of a company. In fact, the asset of a company tends to grow if the non-performing loan, if the ratio is very low. Now, look at here, cost efficiency ratio, or if you like, you call it cost to income ratio. This simply means, in this one, we express it as a percentage of expenses, the operating expenses compared to income. In case of this, in H1 2024, look at it, 75.7. It has reduced to 64.5%. So this simply means this company is generating enough revenue and the expenses is drastically coming down. So cost efficiency ratio, the company is able to reduce their expenses. They have been able to reduce the overhead costs when compared to the income generated. So this is another financial metric that an investor needs to consider before investing in a company. This time last year, the same Sterling Bank offered a right issue. I bought it at the rate of 4 naira. July this year, I sold it 8 naira 98 kobo when I noticed that the stock has gotten to a resistant region, being dominated by the seller. So I have to sell the stocks. But now, presently, the stock is going for 7 naira as the public offer. But if you are buying from the secondary market, which is the Nigeria Exchange Group, you are buying at the rate of 7 naira 45 kobo. So this one is yours. If you are buying the right issue, you will not get the stocks immediately. It may take next few months before the stock will be assigned to you. But if you are buying if you are buying from the secondary market, you get it immediately. So the total board is in your court. For the now, let's call it a day. Thank you.